Good day! Today I'm going to present my assignment, Chapter 1, Part 2, Individual Assignment Online Presentation. My name is Wenzel Lucistanio and the professor is Felanber M. Tonog. This is the question or the instruction for the assignment number 2. Create a PowerPoint presentation includes the following details. Number 1, difference of business type in other country like Canada, Korea, and or European Union. Note, you need to make a research only for one country. However, if you want to include two countries to compare, it will be fine. So for this question, I selected Canada. Number 2, what are the basic process of putting up the business including cost implication? Number 3, basic tax environment. For your presentation, just share the link on the file from your e.g. iCloud, OneDrive, AWS, etc. because we have a limit size to upload. Okay, so business types in Canada. When starting a company, it's essential to select business structure that best supports your goals. Business structures are chosen for the most part to comply with tax law, which treats each type of structure differently. Legal structures for a business. We have sole proprietorship, then partnership, which is a form of proprietorship, corporation, and cooperative. Each type has distinct characteristics. Sole proprietorship. With this type of business organization, you are the sole owner and fully responsible for all debts and obligations related to your business. All profits are yours to keep because you are personally liable. A creditor can make a claim against you, personal assets as well as your business assets, in order to satisfy any debts. If your business has a name other than your own, you'll need a separate bank account to process checks payable to your business. Sole proprietorship has its own advantages. Easy and inexpensive to register. Regulatory burden is generally light. You have direct control of decision making. Minimal working capital required for startup. Some tax advantages if your business is not doing well. For example, deducting your losses from your personal income and a lower tax bracket when your profits are low. All profits go to you directly. Sole proprietorship has also its own disadvantages. Unlimited liability. If you have business debts, claims can be made against your personal asset to pay them off. Income is taxable at your personal rate, and if your business is profitable, this could put you in a higher tax bracket. Lack of continuity for your business if you are unavailable. Can be difficult to raise capital on your own. The business and the operator are one and the same in the eyes of legal and tax authorities. Tax law treats as sole proprietorship business as an income source for the proprietor and therefore requires that the business's financial details be listed in a separate section of the personal income tax form. The business's money and responsibilities are the proprietor's and vice versa. This presents some possibilities for tax management on the part of the sole proprietor. If the business generates a loss, that loss can be applied to reduce income gained from other sources. Sole proprietorships have a downside. However, in the proprietor is personally liable for all the functions and debts of the business. Next, we have partnership. A partnership is a non-incorporated business that is created between two or more people. In partnership, your financial resources are combined with those of your business partner or partners and put into the business. You and your partners would then share in the profits of the business according to any legal agreement you have drawn up. For example, contractual agreement that governs, in the percentage terms, the sharing of revenues, expenses, and tasks. As with a sole proprietorship, there is no legal structure for a partnership. When preparing their taxes, the partners apply the same percentage to income and expenses. In a general partnership, each partner is jointly liable for the debts of the partnership. In a limited partnership, a person can contribute to the business without being involved in its operation. A limited liability partnership is usually only available to a group of professionals, such as lawyers, accountants, or doctors. When establishing a partnership, you should have a partnership agreement in place. This is important because it establishes the terms of the partnership and can help you avoid disputes later on. Hiring a lawyer or other legal professional to help you draw up a partnership agreement will save you time and protect your interest. Partnership advantages. Fairly easy and inexpensive to form a partnership. Startup costs are shared equally with you and your partners. Equal share in the management, profits, and assets. Tax advantage if income from the partnership is low or loses money, you and your partners include your shares of the partnership in your individual tax returns. Disadvantages. There is no legal difference between you and your business. Unlimited liability. If you have business debt, personal asset can be used to pay off the debt. Can be difficult to find a suitable partner. Possible developments of conflict between you and your partners. You are held financially responsible for business decisions made by your partners. For example, contracts that are broken. Next is the corporation. Another type of business structure is a corporation. Incorporation can be done at the federal level or provincial or territorial level. When you incorporate your business, it is considered to be a legal entity that is separate from its shareholders. As a shareholder of a corporation, you will not be personally liable for the debts, obligation, or acts of the corporation. Incorporation creates formal ownership shares, which produces a taxation and legal distance between the company and the shareholders. It has tax advantages from the owners, who are usually paid as employees of the corporation. Corporation has its advantages. Limited liability. Ownership is transferable. Continuous existence. Separate legal entity. Easier to raise capital than it might be with other business structure. Possible tax advantage as taxes may be lower for an incorporated business. Here are the list of disadvantages. A corporation is closely regulated, more expensive to set up a corporation than other business forms. Extensive corporate records required, including documentation filed annually with the government. Possible conflict between shareholders and directors. You may be required to prove residency or citizenship of directors. Cooperative. A cooperative is owned and controlled by an association of members. It can be set up as a for-profit or as a non-for-profit organization. This is the least common form of business, but can be appropriate in situations where a group of individuals or businesses decides to pool their resources and provide access to common needs, such as the delivery of products or services, the sale of products or services, employment, and more. Advantages: owned and controlled by its members. It's a type of democratic control. One member, one vote. Limited liability. And profit distribution. Disadvantage: longer decision-making process. Participation of all members is required in order to succeed. Possible conflict between members. Extensive record keeping. Less incentive to invest additional capital there. Basic process of putting up the business including cost implications in Canada. So here is a list that can be used as a guide if you wanted to start a new business in Canada. Number 1, you should have a business plan. Identify customers and market potential. Outline how you will promote your new business. Identify startup costs. Create financial projections and your branding. Number 2, select the form of business. So from the previous slides, you can select sole proprietorship, partnership, limited liability, corporation, or cooperative. Number 3, you have to register your business in the local legislation. And you have to check all necessary requirements because this might be different from province to province, let's say Ontario versus Alberta. Okay, next is, do you need a business license? If yes, you have to process that. Do you meet zoning and bylaw requirements? Number 6, register for provincial taxes permits if they apply. Number 7, research and purchase business insurance. Insurance is really a must in Canada to protect your business and also the person that's going to create the business or the company. Number 8, understand HR issues and responsibilities. Number 9, keep necessary records. 10, financing. 11, hiring staff, consultant, or accountant. 12, rent your office space or build your own building. 13, assets and liabilities. 14, type and nature of business. Is it regulated or not regulated? 15, day-to-day operations and cash flows. Business registration. So in Canada, business registration is done online. Registering a sole proprietorship or partnership. Register your business with the provinces and territories where you plan to do your business. You have to get a federal business number and tax accounts. And you have to apply for any permits and licenses your business may need. So next is register with your province or territory. Most businesses need to register with the provinces and territories where they plan to do business. In some cases, sole proprietorship operating the name of the business owner do not need to register. You can see their website in the selected province or territory for more further information. So for this one, I'm just giving an example. Let's say if you want to set up a business in the province of Ontario, you can go to Ontario.Canada page business name registration. Next, the registration is valid for 5 years, then it must be renewed. It is important to keep the registration up to date. This means renewing it before the end of the 5-year period and knowing when you have to register again. If you change your business name or type, for example, from a general partnership to a sole proprietorship, this requires a new regulation or registration rather. So this is the cost only for the registration. Costs are $8 to $26 depending on the types of record you want to include in your search. $60 per register, $60 to renew. So the registration will give a master business license or called MBL, which you can use as a proof of business name registration at financial institution and in business transactions of the Ontario government. The renewal is $80 for new or renewal. For the tax in Canada, federal rates, the basic rate of part tax is 38% of your taxable income and 28% after federal tax abatement. After the general tax reduction, the net tax rate is 15%. For Canadian-controlled private corporations claiming the small business deduction, the next tax rate is 10.5% as of February 7, 2017. For provincial or territorial rates, generally, provinces and territories have two rates of income tax, a lower and a higher rate. The lower rate applies to the income eligible for the federal small business deduction. One component of the small business deduction is the business limit. Some provinces or territories choose to use the federal business limit. Others establish their own business limit. And for the higher rate applies to all other income. So for the next slide, how does a sole proprietor pay taxes on their business income? A sole proprietor reports all revenues generated by the business and claims all expenses incurred to earn this income on their T1 income and benefit return. The net income or loss forms part of the sole proprietor's overall income for the year. If you are a sole proprietor, you have to file T1 return. If you have to pay for tax for the year, dispose a capital property, or had a taxable capital gain in the year, have to make Canada Pension Plan or Quebec Pension Plan, CPP-QPP, payments on self-employed earnings or pensionable earnings for the year. If you want to access employment insurance, special benefits for self-employed persons. So if you want more information, you can just check this guide T4002 Business and Professional Income, or you can receive a demand from Canada Gov to file a return. You also need to file a return if you're claiming an income tax refund, a refundable tax credit. It's GST or HST credit or Canada Child Tax Benefit. You also file a return if you are entitled to receive provincial tax credit. Next. Small business taxes in Canada. Be informed about your fiscal obligations and their implications. So, the government body is called Canada Review Agency or CRA. For small business and self-employed income, this is applicable for sole proprietorship, partnership, self-employed individuals, including those earnings income from commission. So this is the website. You can check it for more information. So business income includes money if you earn from profession, trade, manufacture, or any undertaking of any kind, an adventure or concern in nature or of trade, or any other activity you can carry on for profit, and there is an evidence to support that intention. Business income tax reporting. Generally, you have to report business income other than farming, fishing, or commission income using the accrual method of accounting. Farmers or fishers can use the cash method or the accrual method, but not a combination of both. The accrual method, under the accrual method, you have to report income in the fiscal period you earn it, regardless of when you receive the payment. You also deduct allowable expenses in the fiscal period in which you incur them, whether or not you pay for them in that period. Incur usually means you paid or will have to pay the expense. Cash method. Under the cash method, you report income in the year you receive it, whether in cash, property, or services, and you deduct allowable expenses in the year you paid them, except prepaid expenses. If you are a farmer, fisher, or self-employed commission sales agent, you can use the cash method. Facts about accounting. This is in Canada. It's a systematic recording, reporting, and analysis of financial transaction. You will be needing a person in charge for accounting, also known as the accountant. This individual is typically required to follow up set of rules and regulations, such as generally accepted accounting principle. So, this is a requirement in Canada. You have to account and hire an accountant to do the financial report and transactions. Types of accounting is cash basis and accrual basis. Revenues are considered when cash is received, that is cash, and then expenses are recorded when cash is paid. Accrual basis is revenues are recognized when earned, expenses are recognized when incurred. So in Canada, fiscal period for income tax, you have to report it on an annual basis. So the calendar year for sole proprietorship, professional corporations that are members of a partnership, and partners in which at least one member is an individual, professional corporation, and other affected partnership, your business income is generally reported on a calendar year basis. Then, if you're following a non-calendar year, if you are a sole proprietor or in a partnership in which all members are individuals, you can elect to have a non-calendar year fiscal period to file such an election. So these are the forms you can use: D1139, reconciliation of business income for tax purpose. So this is the guide. You can check it more further if you want to see the details. So business and professional income. It is a guide from Canada, issued in the year 2016. So this is an example of how to calculate for the deduction and tax. So let's say business, kilometer driven, expenses. So deductible will be 4,680. So he can claim 5,000. And then another one example, how to claim for tax return. So these are just example for the sole proprietorship business order. So they provided a guide which can help them how to calculate their tax return. Next is, there are some forms that can be used related to the GST or HST. So this is very detailed, and truly you will need someone to assist or do it for you if you are not really aware or familiar how to fill out the forms or which type of forms suitable in your situation. So usually it is common in Canada to hire accountant to do the financial accounts and reports in the business. So hiring accountant consultant for small business. So why? Because they have to do the tax preparation and tax planning. It will help you to make important financial decision, tax planning and tax preparation for both personal and business taxes. Audit report and audit protection. Small business is subject to random audit. Your tax professional will help represent you. Bookkeeping and financial planning. Professional tax expert file taxes. Help your small business grow. Consult with a tax professional on unique accounting requirements. Bookkeeping and financial planning. Provide expert advice. Small business tax consultant will guide business planning, find ways to save costs and manage business expenses, maximize assets and minimize income taxes. Help small business owners if they're looking to expand. Work closely with creditors, help with refinancing, and even help reduce interest rates and manage loans. So, if they do these things for you, you could focus your attention on your business. And a professional tax specialist will help you to spend your money more wisely. Now we go to the corporations' business taxes in Canada. For the corporations, most corporations can file their T2 corporation income tax return electronically using the internet. It is mandatory for a certain corporations with annual gross revenues that exceed 1 million Canadian dollars. Corporation income tax return. All resident corporations except tax-exempt crown corporations, Hutterite colonies, and registered charities have to file the corporation income tax or T2 return every tax year, even there is no tax payable. This includes non-profit organization, tax exemption, corporations, and inactive corporations. So the form is called T4012 T2 Corporation. This is the income tax guide for corporation businesses in Canada. So this is an example of the T corporation income tax return. So as you can see, it will ask for the business number, corporation's name, the year which the tax is applied, the office location, what city, what province, country, if it's other than Canada, codes, mailing address, location of books and records, type of corporation at the end of tax year, and then other things that must be filled out. Ontario Small Business Deduction. A corporation that was a Canadian-controlled private corporation or CCP throughout the tax year can reduce its Ontario basic income tax by claiming the Ontario Small Business Deduction. The deduction is calculated by multiplying the corporation's Ontario small business income for the tax year by the small business deduction rate of 7% for the year, resulting in a lower tax rate of 4.5%. For the tax years ending after May 1, 2014, the Ontario small business deduction is being phased out. Okay, so with taxable capital employed in Canada of more than $10 million in the previous tax year, it is completely eliminated when the taxable capital is 15 million or more in the previous tax year. This change is prorated for tax years that straddle May 1, 2014. Next is calculate a corporation's Ontario small business income for the tax year by multiplying its Ontario domestic factor by the least of the following amounts. So this is kind of technical, but okay, I will still read it for the purpose of information. The income from the active business carried in Canada amount online 400 of the T2 return, federal taxable income, less adjustment for foreign tax credit amount, online 405 of T2 return. The reduced federal business limit online 425, from which you deduct the amount of the business limit you assign under subsection 1253.2 amount, online 427 of the T2 return. So in Canada, there is a electronic format that can be downloaded, available on the website. It is called T2 Corporation Income Tax Guide. So there are some examples, problems, how the calculation was obtained. Okay, so here taxable income, and all. Next is, let's have an example in the province of Ontario. The basic rate, Ontario basic income rate is 11.5%. And there's also the lower rate for Ontario small business deduction, reduces Ontario basic income tax, resulting in a lower tax rate of 4.5%. Reporting the tax. So the T2 return includes the following Ontario corporation taxes: basic income, corporate minimum tax, special additional tax, free life insurance, additional tax, recount royalties. You can use Schedule 500 Ontario Corporation Tax Calculation to calculate your Ontario basic income tax. Schedule 500 is a worksheet and does not have to be filled with your return. So they already made a calculation sheet as a guide. And then on line 270, there's a schedule number 5, tax calculation supplementary for corporations. Enter the amount of basic income tax calculated. So these are the resources where I got the information. Most of it, all of it actually, is from the internet. So that is the summary of my report. Thank you very much.